Welcome to the weekly swing low. It's June 8th, 2025, and let's go through our macro tickers. We'll start with Bitcoin. And so last week when we recorded this, Bitcoin was printing a daily cycle, or excuse me, was printing a daily swing low, and we talked about how the next daily swing low is probably your daily cycle low. As it turns out, that swing low failed. So you see this red line here. That marks the swing low. So this was your candle that marked the low. That was last Saturday. We got a close above. And then that next day we actually flushed the low of that candle. So that Monday candle, made a lower low. So this was actually a false breakdown. Also looked very bullish in real time. And then that next day you got this candle here. Now, if you understand how candles form in real time, this candle, this Tuesday candle, that's a red shooter, was at one point a green bullish looking candle. It looked like follow through off of this, especially after this false breakdown. All of that to say, you've got to be really nimble. So if you took this trade, your stop was somewhere below this swing low. And so once you got this red shooter, you made this lower low the next day. That was Wednesday. And then you made a big lower low on Thursday, broke down below this low here, and so your stop would be anywhere in the range of this candle once you broke down below this low. So you're out, right? Here's the beautiful thing about that. We now have essentially a false breakdown, right? So this low here flushes this low, and very important, it's also it's also taking out these lows as well. So you can imagine this is an area where price aggregated. So below these lows, lots of stops, and this low actually pokes right below that. Very, very helpful. And so this was like day 54 or something like that. And so this would be day 59. And so much, again, these cycles don't have to work like clockwork, but it's always nice when it's even closer to the timing band. And so there's even higher confidence that this is actually your daily cycle low now, especially after you've had this move fail. And if you just look at this a different look at just zooming out, you can kind of see this is kind of like three levels down, right? So you have this big flush, and then you have this lower high, then you have this big flush, then you have this lower high, right? Now you have this big flush. Is this going to be another lower high, right? Like so you've already achieved this lower high and this lower high, right? And so now that is like in terms of the way a proper sort of daily cycle decline looks, this is more than enough, right? Like even this move down here was enough, like this low here. And so again, just more likely that this is a low. This is the low. And again, you can in this case, this candle marks the low. And so we've got to close above the high here, which is, wow, this is the Coinbase price of $105,999.68. So call it 106,000. As we're recording this, we're at 106,300. And so you can absolutely take the trade here. And if you zoom into the 4 hour chart, you can even see more structure here. And so on the 4 hour chart, this is that cluster, right? Remember those daily candles that were all just lined up? This is how they look on a 4 hour chart, right? Like just kind of a big bull flag of this move, which eventually breaks up. But now we're drooping down and we're just back inside this big range, which kind of makes this whole thing a gigantic range, which tells me it's trying to break out from like this giant thing as a range off of this up move here. And if you zoom in, this is now your your most recent swing low that's forming that daily cycle low. This is your 4 hour chart. And so you can see you actually had your back test, right? So that's your higher low. And then you actually formed another higher low. So in terms of stops, you really want price to stay above 105,028. So call it 105,000. So you can enter here and you got about $1,000 of downside risk. And the potential is that you probably see resistance at this peak here. So that's right around 107,000. But most likely, once you confirm this low here, you're probably going back to all time highs. And then again, as I've talked about, this is likely the move to the 4 year cycle high. So you definitely are going to want to be ready to take profits. But if we zoom out to the monthly chart, this is month 31, right? And we usually get a high, like, or the last few times we've gotten a high around month 35. Doesn't mean we're going to see exactly the same thing, but again, my expectation is we could see this thing run into the end of the year, similar to what gold is doing for its 8-year cycle high. And so that means if we look at the weekly chart, right? Like look what the look what's happening on the weekly. So these are all the same levels again because of that multiple time frame analysis. But look what the weekly chart did. We talked about this in the last update that like this candle, right? Like we were basically playing we were inside the range of this candle. And what did this candle do? It broke below that range, a fake out, a false breakdown. And now you expect that we're going to go back to the top of this range, which is your all-time high, and potential, of course, potential price discovery above that. So this is looking very solid. And in terms of like where we are, that would be week 8. So week 8. So this is your weekly cycle low, and we're now on week 8 here. This was your last weekly cycle peak. This one, which was kind of a double top of this, kind of vicious. Like you survive this move, then you're like, oh, we're gonna make a new high. No, we're not. So it's very possible that this is actually the last weekly cycle, right? Like that the weekly cycle high for this weekly cycle will be the 4-year cycle high. I think that is less important to kind of prognosticate on, but more than likely we get our 4-year cycle high by the end of this year is more important. And so in terms of your levels, we talked about that level on the 4-hour chart. I would pay extra special attention to that. But on the daily, keep in mind your low right now. Right. So this daily low is 105,000. It's that same level as the 4-hour. But I would watch this for more volatility expansion. So call it right below 104,000. And the other thing I like important for you to note, look what these 3 daily candles, look what these 3 daily candles do. Wait, so if we zoom out here for a second. So you see these 3 daily candles. This is the failed swing low, right? Or the failed, the failed swing low. You have these 3 daily candles followed by these 3 daily candles. Notice what if you combine these 3 daily candles together, they all form one big candle. That's a bearish outside candle of these 3. Said a different way, this goes above the range of these 3 candles, and then this goes below the range. So this is like a volatility expansion of this range. And now we're about to sort of see the same thing to this end, right? Like to kind of go above this peak. It's what price kind of does on all time frames. And so just kind of pay attention to that kind of pattern. Similar thing with this, right? Like look at this, look at these 3 candles. And then these 3 candles are a bearish outside candle of that one, right? And so eventually we're going to take out that peak as well, again, on our way to all-time highs. These are the little patterns you want to watch for. So that's Bitcoin. What about ETH? So ETH is, how is ETH doing versus Bitcoin? So it had been consolidating on the weekly chart. Let's look at the ratio of ETH to Bitcoin. Okay, so on the ratio chart for ETH versus Bitcoin, we're still in consolidation mode. I mean, look at these wicks on that weekly chart. We're going to refresh here. Hopefully this thing starts to cooperate. 1 second here. Let me just get this watch list back. So we are still seeing a lot of consolidation on this weekly chart. And I mean, look at these upper wicks, and this is the ratio chart of ETH versus Bitcoin. And so still very possible that we have a long-term bottom. This is our monthly chart. That swing low is still in place. And right now, or June so far is just an inside month, a lot to trade. So we'll watch for that. What is ETH doing in absolute terms though? So ETH is doing a similar thing, consolidating on the weekly chart. You really want to stay above 2,300 basically. And the upside of this range is 20, almost 2,800. So a pretty big range here. Look at this. I mean, it's a flag, right? It looks like a bull flag here. Let's see if it breaks to the upside. These things do break to the downside sometimes, though. But look at this, 3 big green candles up. and then just sideways consolidation after that. Again, that's that same range from the weekly. This is just your daily view. On that daily chart, similar to Bitcoin, we're trying to form a swing low here. So by closing above 25.33, it forms a swing low because this candle is your low here. Unlike Bitcoin, it didn't actually make a lower low below this low here, which Bitcoin did do. So it's still staying. Another way to think about this is still consolidating in the upper end of the range of this big up move. So that's very bullish for ETH. And just as Bitcoin is moving to a 4-year cycle high, I would expect that ETH gets back to its previous all-time high, right? Like that's just about 4,800. All right, let's move to the traditional markets here. Let's look at the weekly chart first. We're looking at SPY. We'll start with SPY. So we just closed out week 8, actually. So it's not early in the weekly cycle, right? We got a really short weekly cycle that ended with that low, that April 7th low. That was just a 12-week cycle, very short, rallied for 5 weeks, then declined for 7 weeks. So left translated, but very short. And now we're just making a higher high. Beautiful looking chart here. Observe this gap. Notice this gap. When we do get our weekly cycle decline, we're going to get it. It's going to happen at some point. We probably do fill this gap. So definitely something to pay attention to. But right now, as long as price stays above 595 and we closed here at 599, we're making higher highs on the weekly chart, and anything in that 595 area could become a higher low on the weekly chart. So week 8, generally a bullish weekly cycle rallies for like anywhere from like 13 to 18 weeks, something like that. A very long one might rally for 20 weeks, something like that. This rallied for 19. So at week 8, you could easily see we could rally for another 4 or 5 weeks easily, right? I would think that we are, as we kind of alluded to in the previous update, we're relatively early in a new daily cycle, so we can let that be our kind of guide. So Friday was day 9, and you can see this daily cycle, the previous daily cycle decline was very shallow, which is very bullish. That daily cycle rallied for 29 days. I don't know that we get a rally for a full 29 days, but imagine a world, we have our FOMC meeting coming up. The minutes will be released the 18th, right? That would be that's going to be day 17. So you could see a world where we get a little short-term top there and we get a gentle decline, kind of like this. I mean, this definitely didn't feel gentle as it was happening, but in hindsight is 2020. But that would be a date that I'd be looking for. Again, these things tend to happen with catalyst around them. So the FOMC announcement might be a opportunity, excuse for people to take profits. But right now we're like in the middle, I would say, of the daily cycle rally at day 8. It's not super early, but also not very late at all. In terms of risk, look at what happened with this Thursday candle. This Thursday candle was a big bearish outside candle, right? And then the next day we opened almost above, like basically right above the highs of this candle. We had the jobs report. And so this is called a kicking pattern. Imagine how hard it would be to stay long like that. Like you see a bearish outside candle on the daily, usually that's a warning sign to get out, and for good reason, right? So imagine how many people are potentially chasing here. That is super important. And notice price opened like right here, and it did come down a bit, but then it was bought up, right? So what is this? That's right. It's a higher low. That's super important. This is a higher low at basically call it 597, so right below 597. So that's simple. You want to, if you're not already in, you want to watch for a false breakdown around that level. That represents a beautiful, really nice opportunity. Let's look at that level let's look at the futures now because there's just more structure there. We'll look at the 4-hour on the futures to kind of get a sense. I like the 4-hour because it gives you a good sense of like the structure of the daily cycle to some degree. So this is, where is that daily cycle low? So this is our daily cycle low that's on the May 30th one. Is that right? Let's just zoom out here for a second. May 30th. No, May 23rd, actually. So yeah, that's this one. So this is your daily cycle low, but on the 4-hour chart. So you can see we survived this retracement, right? Like this looks like it's probably a cycle in and of its, could be a cycle in and of itself, right? At 30 candles. And then this could be a cycle in and of itself too, right? That's at 25 candles. And then you're potentially starting a new 4 hour cycle. That is super bullish, right? You could even argue, no, this is all just one cycle, and this was your low, and it was a long cycle. Doesn't really matter. Structurally, though, you want to see ES stay above this low here. So that's 559.84.50, and this is ES, so the numbers are going to be different than SPY, but that kind of gives you a sense of that structure. But I expect we're going to have another up week next week because we're in the weekly cycle advance. And finally, look at this monthly chart. Look at this beautiful follow through we're seeing. It's very early. This is this June candle, but this has all the makings of something that's going to go back to an all time high, right? Like whenever you get kind of nervous, a little worried, just look at this candle. And I would also like zoom out, even look at that quarterly candle. This thing is going to become a bullish outside candle. By the end of this month, we're going to make a higher high above this high, a new all-time high. This will be a bullish outside quarterly candle. And then I expect we're going to get follow through the following quarters. Again, these are not predictions. This is just what you would expect based on looking at the chart, understanding how prices tend to move. So that's SPY. It's a very similar picture for all the others. We'll talk about what those levels are. So for the Qs, that daily low, and again, most of these did the same thing, a little like doji. For the Qs, this was actually an inside candle, so not a higher high, but that candle's low is 528.21. So be aware of that. And that bearish outside candle from Thursday, the low for that is $522.66. So be aware of that. It's the same count though. Week 8, or excuse me, yeah, we just finished week 8, so we're about to start week 9. What about the Dow? So the Dow made a higher high. The Dow, that low that you want to watch out for is $426.55. This is DIA, the index or the ETF that represents the Dow. What about IWM? So IWM is starting to show a rally versus SPY, and so you want to be aware of that. So IWM, the low, which is a nice little hammer, right? Instead of it being a doji like the other indices, that low is $210.60. And the other thing to be aware of for IWM is the weekly candle is a bullish outside candle. That's super important. We've had this big range, so you could see IWM get back to 227 in a jiffy. That's the top of the range that it's bounced around for many months. But again, same count as the others in terms of the weekly cycle, and we're seeing a similar thing. All these very similar patterns. Look at this monthly chart. We're getting follow through, and the quarterly chart. Not look at how much space this quarterly chart has to go before it becomes a bullish outside candle. So that would be a close above $230.18. I expect we get there. I expect we get there before the end of the month. So that's a nice upside for you for the rest of June. But just be careful. Be aware of taking profits. We're going to have a weekly cycle decline. We'll see what the catalyst is at the time. Maybe it's what do you call it? Like government shutdown, like a budget thing. I think that's coming up in late June. So that's IWM. TNA is a way to play IWM. Like it's like a leveraged ETF. Here's SMH. I don't love the look of SMH on the daily candle. It's a red shooter. Be aware of that. The low there is $252.64. The Thursday candle actually isn't a bearish outside candle, unlike the other indices, but the low on that candle is $249.76. So be aware of those levels. SMH doesn't look amazing, but versus the other indices, but they're all doing a similar thing, making a higher high on the weekly chart. There is a gap below, just like the other indices on that weekly chart. So be aware of that when the weekly cycle decline begins. We'll talk about that in real time as it's happening. And again, for SMH, for the semis, keep in mind that sector topped out last July. So we have been declining for quite some time, almost a full year. And so look at this chart, all the makings of a long-term bottom here You had this massive rally, this cool off period, and now we're going back to all time highs and then looking for price discovery. So I like this long term. It isn't looking as good as the other things just on the short term, but so something to be aware of. All right, let's move to Dixie. So Dixie is in its weekly cycle. It is declining week 4, 5, 6. So it's week 6. We just printed a little red hammer, right? So a red hammer is basically every hammer, every green hammer starts as a red hammer. That's important to know. That's I don't think most people realize that. You can't become a green hammer if you don't become a red hammer first. And so this ran out of time to become a green hammer. So it opened at $99.41. And so we closed at $99.20. So it needed about 21 cents to become green. And then it would start to fill up. But this looks like we have a daily cycle low here. So we thought maybe this was your daily cycle low, but it's very possible that this is it here on day 33. So we get a little bit of a rally here. We can see how this petered out kind of early, and then we basically gave back the whole rally. I would expect that we get something like that, because basically we're getting a daily cycle rally within a weekly cycle decline is the thing to keep in mind. So that's week. We're on week 6. The last cycle bottomed on week 30. It doesn't mean we're gonna bottom on exactly week 30 this time, but that's just kind of context for you. And bigger picture, look at how we're just kind of bear flagging after this really massive decline that started back in basically the beginning of this year, actually, right? Like this is the January 2025 candle on a monthly chart. Look at this massive swing high. So below, it printed the swing high after it closed below 106.97 earlier this year. And then we've just drooped lower ever since. So this is in long-term cycle decline is what it looks like. We broke down below this low here, and now we're just kind of sticking around here. So my sense is at some point we're going to get a breakdown, like a more meaningful. And we've talked about this. You would expect price probably revisits like something like this level, right? And you can see how price really spent a lot of time around this level for many months. So I expect we're going to revisit these levels here, and we're going to kind of see where price holds. So like the mid 90s. So that's Dixie, and Dixie has diverged from the 10-year Treasury. We've been talking about this. So the 10-year Treasury yield. Now this is a green hammer, right? Like this started as a red hammer, as we just talked about. Closed as a nice big green hammer. It ran out of time. This is your weekly chart, the U.S. 10-year Treasury yield. It ran out of time to become a bullish outside weekly candle. It needed to close above 4.54, but I suspect we're going to get above that next week, so that this becomes a compound bullish outside candle. Very important concept to understand. These happen all the time. So you get something like this. So if you combine this candle and this candle, it's a bullish outside candle of these two, right? So really, you would expect that we get above this high here, right? So you combine these two candles, these two become a bullish outside candle of that. They make a lower low, right? Get people off sides and then go on to make a higher high. So that's rates to the upside. And in terms of your weekly cycle count, this is week 9, so very similar count to Dixie, I think, or to Dixie, I think, except this is still advancing. So right now we do have a top at week 7, but this has all the makings as we just talked about. This pattern suggests we get a higher high here on week 10. Now the catch is that could be the high that we get, and notice this high isn't much higher than this one, right? Like this was from week 1, the big rebound. And so this has all basically just been consolidation at the upper end of the range of this candle here. And so we could totally get a world where we make a marginal higher high above here and then don't get much higher than that. So it doesn't mean we're off to the races here, but this is certainly not continuing its weekly cycle decline the way that like this candle in isolation looked like we're about to fall off a cliff, or at least try to revisit this low here, but this is a clear rejection of that. So that's your US 10-year Treasury yield. What about oil? So oil is starting a rebound. Okay, look at oil. So we talked about how oil has been meandering around this range here, but somewhere between 55 and 60. And we're now trying to break the upper end of the range. You can see this line kind of clear as day. So call it 65. We need to close back above that to tell us maybe we're leaving behind some kind of weekly cycle, some kind of compound weekly cycle low here. The only problem with this is that we've already wasted a lot of energy down here, sort of consolidating. So not clear how much upside we have. I would think of like up here as like the upper bound, so like something around $70, a little bit higher than that. But this one isn't, not looking super tradable. But on the monthly, we are trying to form, we are trying to make a higher high. So if we can get above $64.14, that would be a higher high. The catch is we need to get all the way back above $72, just a little bit above that, to have a monthly swing low, because this big red monthly candle, right, is looming. So price needs to get above here, right? Like if you can see visually. So if we can get something like this, then we're in business, right? And obviously by the time that happens, a lot of upside has already happened, which is why this is a great illustration of things that are not great trades, not great risk reward. There's just like there are other things that are more actionable, if that makes sense. So that's oil. In terms of your daily cycle, it looks like we are on day 24. The bullish interpretation, though, would be that this was actually your daily cycle low, which it really could be. Oil can be pretty erratic. This could be your daily cycle low here on day 19, and so this is the start of a new one. Tactically, you want to stay above this cluster of lows here. So call it 62.21, somewhere in that neighborhood. This is WTI crude oil. All right, let's move to TLT. So TLT in weekly cycle decline, topped out on week 11. It is currently week 20. And so this was a weekly swing low, I should say, when price was above $85.80. We've now closed back below it. So that's your line in the sand. If price can get back above 85.80, maybe this was an early weekly cycle low. Otherwise, we're still declining in a weekly cycle. And this candle is gonna means we're gonna have an inside weekly candle next week to start. We'll see what it does for the week. But that range is a high of $86.93 and a low of $84.79. Makes things pretty clear. And on a daily level, ooh, that is important to know. This looks like it might be a daily cycle high after a 9-day rally, right? So like this is definitely a daily cycle. So you have a daily cycle that topped out on day 11 and then bottomed on day 28, right? Like that is everything that you would expect from a daily cycle. And so we're now getting a new rally. The catch is it's entirely possible that this is a little back test. We end up surviving it, but we've got to close back above 86.22. Very, very clear. Once price broke below 86.22, I hope you can see that, right? Like this candle marks the high. Once we closed below, and we closed well below it, we actually gapped below the next day. So got to get back above 86.22 as a starting point. Price needs to close above 85.93, right? Like it needs to get logically it has to get above here before it can even get above there. So that can be your first kind of sign, right? If we can do something like this, then that tells you this is serving as a little higher low, similar to this one. And so that's definitely possible. So that's TLT. TBT doing the opposite. So for TBT, your low that you want to watch below is 37.13, but this has a nice little swing low as the exact opposite of TLT, which just printed a swing high. It's just what we would expect. The two move inversely. All right, let's close out with gold and the precious metals. So gold, let's start with the weekly chart first. So we have this very clear weekly cycle high here on week 16. And then we've just been kind of consolidating, right? And this is the low. This is the candle that marks the low. And the high of this candle is 33.26.46. So $3,326, let's call it. We were above there at one point. We closed above it this week. But since that week, we've been consolidating at the upper end of the range of this candle. This has all the makings of bullish consolidation, though. But I mean, this bearish looking candle, this is a green shooter that didn't have enough time to go red. It's the same concept we talked about with a red hammer that didn't have time to go green. Same idea. This thing opened at 32.89, and so it didn't get time. If it had closed below that, it would have went red. And so what you might anticipate is something like this. but gold is bullish right now and getting bought up. So I'm inclined to look for. I'm inclined. I expect. I'm inclined to look for a bullish reversal. That said, this is our daily cycle picture. We have a high on day 14, and by price closing below 33.39, right? Like that's the low of this candle. You can see here that makes this a swing high. So it's very simple. Price has to get back above 33.39, right? Like imagine price does something like this on Monday. That's what we want to see, or early next week in general, right? We want to leave this cluster of lows behind, right? So it gets very simple. And that would mean that we are on week, if this was your low, we'd be starting week 4. So that's something to pay attention to. That like we're kind of wasting a lot of time here, right? Like or not a lot of time, but we're wasting some time, right? Like you'd want to see more of a rally here if this was your weekly cycle low, but it can catch up in no time. But those are your levels, your kind of state of play. And if you look at the 4 hour, you can see we've already started to droop pretty considerably. Your next level that you would expect like some kind of bounce is around 3280, excuse me, 3271. That's like this pivot here, right? And so like really really short term, we need to see something like this, right? We need to see a swing. So we need to see a 4 hour close above 3324, something that looks like this. That would mean a 4 hour swing, and that would mean a potential reversal brewing on the daily chart. That would be your first signal. All right, let's move on to silver, which is actually showing some very bullish divergence to gold. Now, notice that Friday candle was a red lower low for gold, but we have a higher high for silver. So silver has woken up. You can see it on the weekly chart. If you think about something that's maybe even diverged from gold, this would be week 8, right? After this weekly cycle low, which actually broke below this low here, then we just kind of consolidated and now we're trying to break out. So this is one that you can absolutely play. I mean, like zoom out. Silver hasn't been this high since like 2012 or something, right? Like look at this. This is on a monthly chart, right? This is going back to 2012. Wow, you have this candle like September 2012. The high was $35.40. So you have to turn the clock back like 12, 15 years. Wow, that's something to take notice of. And look at this long lower wick. And so, especially if gold can kind of get its act together, I think silver is definitely something to be played. So the low on Friday was 35.60. I would look for a false breakdown of that level would be an ideal kind of entry point. And what about miners? What are miners doing? So miners made a lower low just like gold. So miners printed a swing high by closing below $52.81. This is GDX. So we've got to break back above that. Pretty simple, right? Break back above $52.81, and we are back in business. In terms of, now this is really interesting, right? So GDX actually made a higher high above that swing high from week 17, whereas gold hasn't done it yet. And so this is telling you this is a new weekly cycle, which tells you gold almost certainly is in a new weekly cycle as well. This is helpful. And it means that that miners have been outperforming gold, which is actually it's actually bullish, right? It's what you want to see. Now this is a very bearish looking candle. It's a red shooter. Yikes. And so the low of this candle is 51.47. So you want to be careful, right? Like we do not want to close the week looking something like that, right? And so we're going to be watching that very closely. But this looks like something that's trying to run to a new all-time high. So similar to silver, this thing hasn't been this high since, well, in this case, 2011. So we're approaching a new all-time high for GDX that it hasn't seen for over like 12 years. Wow. And finally, let's look at natural gas really quickly. So natural gas, we're getting a rebound. So on the weekly chart, So price is holding this little higher low, so this little low higher than this low, by closing above 3.51. And so if we look at the daily chart, we can think about our risk level. Pretty simple. Got to stay above this cluster of lows here. So this low here is 3.39. Gives you a pretty simple line in the sand, right? Like imagine you want price to kind of remain above this level here. And the implication is that, right? So this, that, right. So you could see a world, the bullish case would be that this was your daily cycle low at day 25, so back on May 29th, and that we started a new daily cycle here. And so that would mean we're about to be on day 7. And that would mean this is potentially your little back test. You're always going to get some kind of, I shouldn't say always, there's no such thing as always in markets. You usually get some kind of back test, and so this could be the back test that we just survived. So that's natural gas, and that's all the tickers. Thanks for watching.